from a Crypto Astrology Group CAG member webinar with William Stickevers.
We see that Lummis introduces the strategic Bitcoin reserve legislation officially. And Armstrong stated at the WEF meeting in Davos that Coinbase supports the idea that governments, including the US, should hold Bitcoin as a reserve asset, likening it to a modern gold standard with better portability and divisibility. This certainly upset a number of people in Davos, but it's really clear. The writing is on the wall. This is coming, and there's nothing that the WEF can do, the powers that be, the Klaus Schwab cloud can do to stop this. And Fred Thiel at Mara basically is spearheading an ambitious plan to establish strategic Bitcoin reserves across all 50 states and the federal government. The initiative has already gained traction, with 11 states introducing SBR legislation, including Florida, Alabama, Utah, Wyoming, and Massachusetts, with Bitcoin trading at all-time highs and the Trump administration appearing Bitcoin and crypto friendly. Mara's timing for this nationwide Bitcoin reserve push couldn't be better. So we are getting there. This is imminent and inevitable. And since Trump has taken office, we're seeing also gold, not only Bitcoin, but gold is surging significantly. So one of the big developments also that occurred yesterday leading up to this wedge pattern was Italy's largest bank makes its first Bitcoin purchase in a $1 million test, saying, quote, "It's a very small amount considering we have 100 billion euros in our securities portfolio. It's an experiment. It's a test." So this move stands out in Italy, where the central bank governance has consistently cautioned against digital assets like Bitcoin and Ethereum, describing them as unsecured. Now, Italy realizes that this is imminent, because the big thing that's being discussed right now is that the U.S. is likely, legislation is going to be passed, regulation will make it possible, where we're going to see regulatory clarity lead to a lot more tokenization. And I'm not talking about more altcoins. We're talking about tokenization of every asset class, including for bank deposits, because tokens, what they're realizing now, is a superior form factor for a digital economy. So the success of stablecoins, for instance, has proven the demand for tokenized dollars. And the theory behind tokenized deposits goes something like this. Like stablecoins, bank accounts are just dollar liabilities people use for savings and payments via their checking account. Since tokens are superior to accounts, we should have banks tokenize their deposits so people could use this on-chain as well. So we're going to see the banks get very involved in this. Italy's picked up on the fact that Bitcoin will be a strategic reserve. Also, the fact that we're going to see tokenization, where we're going to see tokens, anything on a blockchain will be possible to be deposited. So Trump to soon sign an executive order easing bank ownership of digital assets, says Circle's CEO. And Bank of America CEO says the financial industry will jump into crypto payments if regulators allow it. And we know regulation is moving rapidly in that direction. Okay, so the thing that was stated earlier today was by Michael Saylor. Michael Saylor stated that the first nation to print their own currency, to print fiat money out of thin air and to buy Bitcoin with it, wins. And this is something that 99% of mundane and financial astrologers and nearly 100% of astrologers still don't get. That the first country that says we will print money, we will then take that money and convert it to Bitcoin and put it on our ledger and use it as an asset to commence, all types of monetary operations, banking operations, trading operations, is going to be the winner. So this trend is moving very, very fast. The other thing that's happening, what's very interesting, and this is connected to Bitcoin in a way, is that gold is suddenly back to within a whisker of its all-time high. Now, what did I tell you all last year? I said the two biggest things to be vested in is Bitcoin and gold. The asset allocation you should have for each one is dependent on your age and dependent on your exit. Like, when do you plan on off-ramping into cash? for lifestyle trips or for retirement, etc. So the money is going very quickly into gold and into Bitcoin because as of today, Bitcoin's market capitalization is officially above $2 trillion. So the market value of the world's largest cryptocurrency has doubled in just 11 months and has quadrupled in 20 months. Since 2016, the market cap's compound annual growth has reached a massive 97%. So to put this in perspective, Bitcoin accounts now for 54% of the total crypto market value. So Bitcoin dominance now is at 54%. And the second largest token, Ethereum, reflects just 11% of the market. So crypto investors are winning. And what we're seeing here is we look to the plan B, we look at the relative strength index, the RSI. Bitcoin's recent performance has been remarkable. It has exceeded $100,000 and is currently trading at approximately $104,000. And what you need to keep in mind is Bitcoin is getting stronger. The RSI is at 76, and 99% of traditional finance have absolutely no idea what is happening. They have no idea that this is really happening. Traditional finance people, we look at the Bitcoin market cycle here, and we could see we're still in the early phases of this bull market phase. We're in the red. So we see here that Bitcoin's market capitalization hits 2 trillion right here. It'll begin to demonetize Google and Amazon. Right? It's demonetized oil, Saudi Aramco. It demonetized the stock market. It demonetized silver. It demonetized Facebook. It demonetized the S&P 500. It demonetized Tesla. Demonetization means, should I put more money into Tesla, William? Why would you do that? What's going to beat Bitcoin? There is nothing out there that can beat Bitcoin. Like, in other words, well, let me put money into this AI company that will get me at least 70%. Why would you do that? Put it in Bitcoin instead. You'll get 150%. Oh, yeah, right? So it's coming down to the fact that the only thing that is stopping Bitcoin is gold, and Bitcoin is coming for gold. Why? Look at this. The Bitcoin adoption rate is faster. The internet, by the way, is the greatest technological adoption rate in the history of mankind. Faster than people got radios, faster than people got cars. So the internet has beaten all of those and was eclipsed by Bitcoin. Bitcoin is blowing out the adoption rate of the internet equivalent to 1999. So you all remember how many people, I'm sure many of you had the internet, but how many people that you know, like friends, family, even offices, or they only had one internet connection in the company and nobody else had the internet in 1999, right? I'm sure you all remember that. So that is where we are at when it comes to Bitcoin. That being said, if we're in 1999, like Bitcoin is equivalent to 1999 relative to the amount of people that have and use the internet, then we're already at 11%. Bitcoin has demonetized 11% of gold. Look at that. It's on its way to flip gold. And look at this. Wall Street ETF inflows for gold and Bitcoin. This is Wall Street putting money into the gold ETF. Look at that. Bang. We're not even we just started year 2. So what is the smart money doing? What is the two big DeFales doing? They're moving their money into Bitcoin. Look, it's going to easily eat away with all these stocks. You know, if Bitcoin just 2X's, it blows out an NVIDIA. And the Bitcoin banana zone run hasn't gone full throttle yet. We're just entering the second phase of the banana zone. And remember, the banana zone was when Bitcoin went from what? 50-something thousand to 108,000. So we're looking at Bitcoin demonetizing these AI tech stocks, blowing them out, and then going after gold. And here's something Wall Street doesn't want you to know. You've always been told by your too smart to fail certified investment advisor that equities are supposed to outperform gold over the long run due to earnings driven by their products and services, dividends and such. But that hasn't been true over the past 25 years. If you had invested $10,000 in either two assets a half a decade ago, you would have had $90,000 in gold and $65,000 in stocks. But nobody talks about that. And by the way, when we talk about stocks, that includes dividends for U.S. stocks. So that's important. That means gold is outperforming stocks. Why is that happening? Because the dollar is getting wiped out. The debasement of the dollar is accelerating. It's intensifying. And you keep working harder in your business and you actually have more money than you did last year, but your options, your financial firepower is diminishing simultaneously, unless you're investing in something like Bitcoin, right? Or some other crypto or some type of AI equity. But the point I'm trying to get at is if people just invested in gold, which is boring, they would have blown out stocks. Now, here's the interesting part. You go back, you take Bitcoin, gold, S&P, after 1 year, right? Bitcoin's 124%, gold's 31%, S&P is 22%. Gold outperformed the S&P. If you go back 14 years, Bitcoin's 29 million% return, you would be a trillionaire or a multi-billionaire. 98% return for gold, 352% for the S&P. So what's interesting here, Bitcoin has been significantly outperforming gold and the S&P for years. So you look at every year, the compound rate of Bitcoin. Now, it's been averaging about 124%. Annualized return is somewhere about 145%. So it's nearly 150% a year. You look at gold, you look at S&P, and you got to ask yourself, why would I put money into anything else? Think about it. Why would you put money into anything else? So the strategic reserve discussions that are going on right now, they're realizing, whoa, why would we put our money into bonds? Why should people buy bonds when they could buy Bitcoin or have a Bitcoin-backed bond?
After 4 years of high-accuracy crypto forecasting, including his early call on institutional adoption, William has closed the Crypto Astrology Group and report. But his mission to guide serious investors with strategy and timing continues. A new altcoin group is coming, focused on the high-risk, high-reward phase of this cycle. Join the early access list to be notified when details are released for the altcoin investor group at the link in the description or at williamstickevers.com.